Hey, what's up guys? In this video I'm gonna show you my simple forex trading strategy for beginners. This is literally for beginners who have probably never traded in their life before, so I'm gonna make this video very clear for you guys so you guys kind of understand where the trading strategy really actually comes from. So if you're a forex beginner trader and you're barely starting to learn how to trade, I definitely recommend that you pay attention to this video and actually, if you can, subscribe to this channel, because I guarantee you that this channel is gonna help you tons. This channel has nothing to sell you. It literally has no course to sell you, none of that. You can just literally watch and learn completely for free. Okay, so let's go ahead right into this strategy. I'm gonna break it down so simple that it's gonna make sense. All right, so let's go to the trading view chart right here. We are trading EURUSD on the FXCM broker on TradingView. Obviously I say FXCM because we have Oenda, we have Forex.com, we have Paperstone, IC Markets, etc. So we're gonna focus on FXCM as our price point indicator. All right, so let's go ahead and find the strategy for trading for EURUSD. Okay, so as you guys know, every pair has like a different pattern, repetitive, that kind of has its way of trading. All right, that's why a lot of people say that you're not supposed to trade different pairs at the same time, because it's not simple, because every pair moves different. So you have to kind of find your edge in one pair. One thing I do recommend you guys is that if you guys are gonna start trading forex, just focus on one pair for 1 year and do your best, and I promise you, you're gonna get 99% way better than if you were focused. That if this month you focus on trading gold, or next month you focus on trading GBP USD, or next month you trade crypto, or in the next following month you trade, I don't know, Bitcoin, whatever. Point is, focus on one single pair and that's it. Keep it like that for one simple year, and I guarantee you, you're gonna be 99% better than what you started. So now, as far as for our strategy, the first thing I usually do, the first thing I definitely have to do is check market structure. Market structure is actually deciding if the market is going to go up or if it's going to go down. So the only way to be more assertive on market structure is to go to the higher time frames, because you can actually see how the market has been moving. You also don't want to go too higher up like a weekly or monthly market structure. All right, you kind of want to be in the middle. All right, you don't want to be on the 15-minute time frame, but you also don't want to be on the weekly time frame. All right, so keep it between daily and 4-hour time frame. That's the best one that I could recommend you guys. So as far as this video, we're gonna go to the 4-hour time frame and we're gonna see our market structure. All right, okay, so we can definitely see that on the daily we have been going obviously upward, so that means we're bullish. All right, and on the 4-hour time frame, as you guys can see, we have also been bullish. Let me just take this out, this is bothering me. All right, let me just go ahead and do this real quick. Oh, I think I went somewhere else. All right, hold up guys, stay with me. There you go. Let me just get rid of all of these, and let's go ahead and actually see our market structure. All right, we see that on the daily we are bullish, and we obviously see that we are still bullish on the 4-hour time frame because we are obviously going up, right? But there's something here that you should be really careful is about this zone. This could be confluence. All right, confluence only means that the market has not yet decided what does it want to do. All right, a lot of people think that we are only bullish or bearish, but most people forget about confluence stage of the market. Once we are in a confluence state, for the longer we're staying in the confluence state of the market, it only means that price is either about to shoot up or about a dip, like really bad. So in terms of trading, it only means that it's either going to shoot up or shoot down, either one of them. Okay, and the best way to catch that is for our confirmations that I'm about to show you guys in this second. So for as far as we know, we have we have a low, we have a high, we have a higher low, we have a higher high, we have a higher low, and we are apparently bullish on our way to creating a new higher high. So I think that price is actually gonna reach new highs because we have one confirmation. All right, first of all, we're bullish. That's the first confirmation, we're bullish. The second confirmation is that we are creating new higher highs on the market structure pattern. We see low, we see a high, we see a higher low, we see a higher high, we see a higher low, we see a higher high. We see that we are confluencing and forming a higher low, so we're now expecting to create a new higher high. So that's the second confirmation. We have now two confirmations right here on this simple 4-hour time frame. Now let's go into the 15-minute time frame. This is why it's so crucial and important to know how to move your way around through the time frames, because if you do this strategy, if you do this bullet market structure or confluence zones and all this stuff on the 5-minute time frame, it's literally not gonna make sense, because you are trading so zoomed in that you are not actually looking at the bigger picture. All right, but if you also do it way too higher up, like from the weekly or monthly time frame, it's not gonna make sense, because you are looking at candles that are being formed every single week or every single month. So you kind of want to stay in the middle. All right, so now let's go into the 15-minute time frame to actually find our point of entries. So the first thing, we have two confirmations that price wants to be bullish. All right, so now let's clearly analyze our data here. Let's clearly analyze what the market is telling us and what the areas of interest have actually shown repetitively from the market. All right, so the only best way to do this, or the best way that I do it, is I tend to, where is my little square thing here? Okay, I'm just gonna look for it here. The first thing that I do is I grab the rectangle tool, and then what I like to do is pinpoint the areas of interest where price usually tends to happen to be a lot. All right, so we see that we have a lot of points touched in this support or resistance bar. The reason why I say support and resistance is because if it once been resistance, has now been used as support now. I hope that kind of makes sense. I know my accent is a little bit weird, guys, but stay with me. I promise you guys, I'll make them profitable traders. All right, we have another point of interest here, right around this point. All right, so let's find another area of interest that might be important for us. Okay, I see another one right here, and they're all going to make sense, and I'm going to explain you why in a minute, why they're going to make sense. All right, I see another one here where price is actually respecting away from. I see another one here, and I also see another one here being created in the past weeks. So the way I like to watch the market is I like to think of it as areas where if an area was priorly touched, price usually tends to come back to it or react from it. All right, so what I like to watch and idealize my market strategy is just simply like if you were to go into an escalator, if you were to either go up or go down, but you do it through certain levels, like every single step down, every single step down or every single step up is literally an area of interest. And what I like to call area of interest is the points of the market that I just shown you guys, the points of the market with price usually tends to make a big impact from. So we have a lot of touches here, we have a lot of touches here, we have a lot of touches here. So those are my areas of interest. So I see them as escalators, like every single step. So we are now, if we are on a bullish market structure, that only means that we are going upwards, like we are going stepping up. So I like to see the points where my price point is actually stepping up to. All right, so the best way to put it is, so I see the price has been in this point, it decided to step up to the next zone, it stayed confluencing a little bit, and then it went up, and then it decided to come down. All right, that's cool. And then it decided to go up again, created a new all-time high, and reached a new stepping zone, and then it went up to the next one, and then it came back down to retest like it does usually, and then it went up to the next one, and then it didn't want it to keep on going up, but regardless it was still going up because it's still going bullish. All right, so this is what I like. This is why I like to have my market structure dialed in from the beginning, so I know where I'm going, if I'm going up or if I'm going down. Obviously we're bullish, so I know that we are going down, so we have more chances of prices going to the next stepping part of the ladder than actually coming down. So what I like to point at is that now, if we have been going up all this time, is touching all these steps, I'm now expecting to break this new area of interest and create a new one. So I would like my price point, my target profit, to be right around a new area of interest. And I like to be biased as well, just in case price does not want to break above and create and use this as a new stepping zone to create a new one. Price might actually want to come back to this level like it happened here. It was going up and then it decided to take a retracement, but also kept on going up. All right, so I like to be biased on this opinion. So if I have one option for buys, I also have to be certain and have option for sales, just in case. Because remember, you cannot predict the market, you can only react to it. All right, so my basically my entry would be here, my stop loss would be right underneath this, and this would be my take profit to create new highs. And if in case I were to take sales, of course my take profit would be the next stepping zone down, and then my stop loss would be a little bit up. So this would be sales and this would be buys, and that's how I take my strategy. It's so simple, guys, but it works. It does work. So now let's go more technical here. Let's actually take the tool, the long position and the short position tool, to actually see where I will be taking the sales. I will be taking sales right around here. I would have my stop loss a little bit in between the middle, so I know that price does not want to go up, price does not want to go down. And in terms of buys, to create a new higher high, I would have my short position settle like this, and I would have it the same thing right in the middle, and then I would target new highs. If every stepping zone usually takes about 240 bars, then I would do the same thing. I would target 240 bars. Alright, so I hope that kind of makes sense, guys. I hope that you guys kind of understand my point in my perspective in this strategy. It's so simple that 99% of people make it so complicated. They make you understand indicators, they make you understand order gaps, fair value gaps, order blocks, SMC, all this type of pattern trader. Trading is only a matter of repetitive areas of interest that have been touched in the past. History repeats itself in the market, so you just have to find your edge, and this edge has been working for me, guys. I promise you that if you try it, you're gonna understand trading so simple, and it's so incredibly simple that it's now going to make sense and it's going to make you profitable. So this is my strategy, guys. I hope you guys like it. This is definitely for Forex beginner traders. Of course, I didn't go over order blocks, over fair value gaps, Fibonacci, and stuff like that. That's kind of for like more advanced in trading. I also can talk about it, but I want to focus on beginner traders. So let me know, beginner traders, if you guys understood this strategy, and if you did, please let me know in the comments what next video you guys want to see of. And one more thing, if you guys are not just yet subscribed to my YouTube channel, please make sure that you do it and join my Telegram group chat, where I will be trading completely for free. I will be trading live, so you guys can enter my trading room and you guys can actually be a part of me trading in the morning. So if that's something that you guys are interested, please make sure to subscribe and stay tuned for the link of the Telegram group chat. I hope you guys like this video, and I see you guys in the next one. Take